Hello everyone, welcome to PracticeMock's YouTube channel on regulatory bodies examination. So in today's lecture, we are going to discuss about alternative investment fund. It is very important for SEBI, RBI, IFSCA and any other banking exam which you are preparing for. So we'll start with the news. So the news is about that SEBI has released a consultation paper in which SEBI explained basically that how should be an AIF be valued. What is AIF? AIF is nothing, it's a fund which is being invested in some units in some XYZ place. For example, angel fund is being invested in startups. So how do you value an AIF? Just for example, you invest in mutual fund, you go to a market, means online market, you find the unit price of mutual fund, what's the exact price of that mutual fund, and you buy on that price. Somebody must have had valued that mutual fund based on something, and that valuation criteria is given by the SEBI for mutual funds. Similarly, for AIF also, SEBI has given the valuation criteria, but now SEBI wants to relax it because SEBI wants that mutual funds are different, alternate investment funds are different. The valuation criteria shall be different for both of them, because first of all, mutual funds invest usually in public trading, means in public market. For example, it generally invests in stock exchanges, shares being traded in stock exchanges, and a lot of people invest in mutual fund. For example, if there is a mutual fund by some XYZ bank, many people would come and buy the units of that mutual fund. But AIF is something else. AIF is a privately pooled. Here the people are limited and it is concerned with the profits a lot. Okay, and it also generally takes part in day-to-day operations of that company also. So the valuation criteria for AIF shall be different and should be relaxed than the mutual fund. Because mutual fund is a public instrument, but AIF is private instrument. In public instruments, you cannot take much risks, but in alternative investment funds, you can take risks. So why should the valuation criteria be same? Okay, it shall be different. Got it? So अब हम बात करते हैं what is an AIF, what is alternative investment fund. So as the name suggests, it is an investment fund and it is an alternative. Alternative to what? Alternative to regular instruments. See, what you do if you want to invest in some company, you go to stock exchange, you buy their shares and you then invest it, or you will buy mutual funds which will indirectly invest in equities of different companies or debt securities of different companies. But what's happening is these pool funds, like mutual fund is a pool fund, they cannot take a risk beyond certain limit. They cannot take a risk beyond certain limit because they are being publicly held. A lot of people invest in mutual fund, and if they take a lot of risk, then of course there is a chance of failure also. But for alternative investment funds, SEBI has intentionally said that these instruments can take risks because these are privately pooled. If there is some loss, that will be held by those privately lost people, not by the public in general, and that will not also impact the market in large. Okay, so these are alternative investment funds. These are privately pooled vehicle to park funds in for different purposes. Okay, this is AIF. Now, what are the categories of AIF that we will explain? There are three categories: category 1, category 2, category 3. So category 1 AIF speaks about venture capital, angel funds, small medium enterprise funds, social venture fund, infra funds. Okay. Now before explaining these categories, I will want to tell you few things. Like why I am telling that AIFs are privately pooled. What does privately pooled mean here? What does privately pooled? कोई पूछा आपसे privately pooled का मतलब क्या है? देखो, what happens, for example, if you want to raise money, if your company wants to raise money, you go for IPO. It is initial public offering. It is public, means you are asking public to give you the money. But AIF is not like that. You cannot go public first of all to get funds for your AIF, but you can get it through private manner. What is private manner? I will explain you. Privately pooled means the number of investors that can invest in a particular alternative investment funds that cannot go beyond 1000, but it is only 49 for angel investor, angel fund. एंजल फंड में सिर्फ 49 हो सकते हैं, नॉर्मल के अंदर 1000 तक मैक्सिमम हमारे इन्वेस्टर्स हो सकते हैं इन AIF. Okay, means there cannot be more than 1000 investors in a particular AIF. That means of course it's a private. When we say private, it is private because it is limited by people. It cannot go beyond certain limit. Okay, so this is what the privately pooled means. Okay, now there are other things also. Now as I told you ki AIFs are riskier and only those people shall invest those who have minimum net worth. And it is also said that the minimum amount that can be invested in AIF shall not be like 1000, 2000. It is a big number because only those people can afford it who has the high net worth. Like angel investor can invest in angel fund minimum 25 lakh rupees, but for a normal AIF it is 1 crore rupees. So this you need to remember, that you generally, a normal retail investor cannot invest in AIF unless and until he satisfies the criteria, eligibility criteria for that particular AIF. ठीक है? So I hope आपको ये चीज़ clear हो गई हो why it is a privately pooled vehicle. Okay, now we will explain you what are the three categories. The first category, as I told you, is venture capital funds, small and medium enterprise social venture funds, infra funds. ठीक है? So these funds are for investing in startups, seed funding हम कहते हैं. That is basically the funds. Angel funds हो गया, venture capital fund हो गया. Okay. Now these are very riskier. First of all, you do not know whether a startup will progress or not, because we all know the ratio. If an angel fund is invested in 100 startups, at least 50 would either be in losses or less than that would fail also. So this is the ratio. So very few success chances are there. So it is a riskier, but the reward is also the big. Means if out of those 100, even 2 startups valuation goes 100 times in few years, then their losses will be covered. They will be happy. But it is a riskier also, no? Why would a retail investor who is invested in an angel fund would wait for 10 years for a startup to boom? Also, see, people like you and me, or retail investors generally, do not have information about the startups. Like, how do we know that a startup will do well? Unless until we have the experience of like 15 or 20 years in a market. Okay, so that is why also not everybody can invest in AIFs. See, if you want to buy a share, what you will see their parameters, what the profitability, what was their revenue in last quarter, what is the price to earning ratio, current ratio kitna hai, return on capital employed ratio kitna hai. You will see these things. But in AIF, there are few things that cannot be seen by our naked eyes, because we do not have the enough information about it. That is why AIFs are privately pooled. Okay, so this is the category 1. Then comes category 2. So category 2 is something different. It is different because it has funds for different purposes, like real estate funds, private equity funds, funds for distressed assets, etc. Okay, so there is a fund called Swami Fund. If you must have heard, it is by Swami Fund. If you must have heard about this fund is run by the SBI Cap Ventures Limited. Okay, SBI Cap isko run karta hai. Now the point here is that this fund is for distressed real estate assets, like those distressed real estate assets जहाँ पे ये अपना fund लगाता है. ठीक, so this is all an example of category 2 AIF. Category 2 AIF. This you need to remember. Exam में they can easily ask. I remember, I think in RBI only they asked about who are the investors in Swami Fund. Okay, so this you need to know. Apart from this, one thing I want to tell you, that in an AIF there is a sponsor who is starting the AIF. then his partners are promoters. Like there will be one owner जिसने start किया पहला step, that will be sponsor, उसके partners promoters, and then those who are managing it, they are managers. Okay, now then there is all trustees also. Now what is the trustee? Trustee ensures that the AIF's principles are being followed. Okay, like म्यूचुअल फंड में भी वहाँ पे ट्रस्टी होते हैं, उनका मतलब ये होता है कि ट्रस्टी are ensuring that the rules and regulations are being followed by the mutual fund. So this will help the investors who are investing in that particular mutual fund. Clear? So this is the category 2. Then come category 3. So category 3 is the riskier category, as it also being called as hedge funds or PIPE funds. PIPE fund stands for private investment in public equity. So one thing is here, in public equity, like AIF can invest in public companies also, like this PIPE fund, private investment in public equity. Okay, but private equity is different. Private equity is that some pool of investors are buying equity of unlisted company. If it is a listed, then it will not be private equity, because public are also buying that security. But private equity is when a pool of people are buying security of an unlisted company. ठीक है, so these are category 1, category 2, category 3 AIFs. तो I hope आपको यहाँ पे चीज़ें क्लियर हो गई हो कि AIF exactly है क्या. हाँ, see the point here is that there are many more things which are to be covered in AIF regulations. There are eligibility criteria, whether the manager or the promoter should have some interest in an AIF. Like somebody is managing an AIF, should he be also being as an investor also there? Yes, he should be also taking some risk. See, if somebody is managing up AIF, then he should also put his own risk. So there are many other things that are to be discussed, that is covered in our course, but the information that you need to know, basic information, I have covered in this lecture. Like what is AIF, what is called privately pooled, categories of different AIFs. Like for every category, there are different regulations. Okay, who can be the real estate funds, private equity, what is the minimum number of shareholders there. That see, these things are part of regulations, and these needs an extensive video or extensive coverage that cannot be covered here. But the basics part is very important, that you need to understand the conceptual part that I have explained you. Okay guys, so such news, since it was a part of today's SEBI news only, such news you need to cover, because exams are coming, SEBI, RBI, IFSCA also. So you need to start studying newspapers also. Before 2 weeks of exam, just stop reading newspaper, I would suggest. Then you will practice mocks. But since you have time, 2-3 months are there, then so you need to buckle up and start reading important snippets of newspapers. Not all the content, but see, hardly in a minute if you find there will be 4-5 articles which are worth reading. Rest is something which is being like a repetitive or changing daily basis, not relevant for the exam. 4-5 articles are there. For that, what you can do, you can follow our Telegram channel on that ID I will mention in comment section. Okay, you can follow our Telegram channel and find the important list of articles from the Mint newspaper. Okay, and those who are part of our study group, which is for the paid member, they generally get the list of articles and also the PDF also of the newspaper. So thank you guys, and keep studying.